additional entry. They are simply saying, go back to your basic double entry. That's the first required. Then the second required, prepare the notes for the acquisition of Senza in consolidated financial statements of Imfundo. The moment we are saying a note in the consolidated financial statements of Imfundo for 2021 in terms of IFRS 3 business combination, and indicate as part of your note disclosure any missing information required for complete disclosure. So I'm in the exam, maybe confirm for others, this is the first time to come across a question which needs you to prepare a disclosure note. Hello? You can show me through reaction. Is it the first time for others to see a question where they require you to prepare a disclosure note? I'm not seeing any reaction, so it means it's not. I think obvious is saying it's the first time. Others, they've already done a disclosure note. I can see also Davido. All right, so, okay. I can see many reactions now. But this is the first time I'm in the exam. But you see the importance of our teaching philosophy. I teach you to understand. I need you to understand the standards, how to use the standard. So if it was your first time in the exam, and there are 33 marks there, am I going to leave it blank? No. So what am I going to do? Because it's already the exam. So if I'm dealing with such type of questions, I've come across that for the first time. I've never done a question like that. So the first thing I'm going to do, I definitely have to open the standard. Remember, that's why it's an open book exam. So I'm going to go to the standard. So let's open the standard quickly. I want to show you something. So even if I don't have knowledge and an understanding what a disclosure note is, but I should be able to answer the exam. And 35 marks. So I open my IFRS 3, they were clear here. So at least I have a guidance. So if I open IFRS 3, which deals with my business combination, and maybe I have not even flagged those parts. So if I go to the index table and confirm, you can see my index table here. So if I go to the index, what am I looking for? I'm looking for disclosure, which is my para 59. So can you see here? That's where, so in other words, the required was derived from this para 59. Then the next thing I have to do, I have to open that para 59. So let me quickly go to para 59. I want to show you that, please, that's why it's an open book exam. So you should not be afraid, even if something which seems new is triggered. So if I go to para 59 here, definitely they are saying disclosures. So if I read it through, the acquirer shall disclose information that enable users of its financial statement to evaluate the nature and financial effects of a business combination that occurs either during the current reporting period or after the end of the reporting period. But Mkatarisa team, here they are not saying anything much, but para 60, you have to meet the objective in para 59. So they are simply saying, for me to meet what's being stated in para 59 here, the acquirer shall disclose information specified in paragraph B64 to B66. Hello, are you following them? So meaning to say, they are directing me to B paragraphs. The B paragraphs, they represent what we call application paragraphs. So your B paragraphs refers to application paragraphs. So I'm going to go to B64. Let's quickly go to B64. All right, let me open here from my side. So B54 represents application paragraph. So if you direct me there, and remember, they want me to prepare a disclosure note. So if I go to B64, just a quick one. Or are we all on B64? All right. If you go to B64, it's clear. It's disclosures, but they are saying application. So it's now the application of your para 59 in 61. And remember, para 61 was saying in order to meet the objectives. What objectives were in para 59? Can someone read again what para 59 is saying? What's being said on para 59? Can someone quickly read again para 59? Because this is, we are applying what
para 59.
Yes, Tinashe. Yes. Can't hear you.
To evaluate the nature and the financial. Hello.
Yes.
It be para 59. Para 59. The acquirer shall disclose information that enables users of its financial statement to evaluate the nature and financial effect of a business combination that was during the current reporting period or after the end of the reporting period, but before the financial statements are authorized for use.
Thank you. Younger breaker a bit. So, Tim, another important thing, confirm standard main patterns disclosure application of paragraphs 59 to 61 via an illustrative example. Confirm. What end up illustrative example what? Hello? They are guiding you to a certain illustrative example. Confirm they are reading
illustrative example ipo it will be B64 ndo kune ila kwa dalila ku illustrative.
Yes, which illustrative example?
Example 72.
Example 72. So, Tim Kanozadai so exam rapiraka. So what is in that particular example? That's the same thing I'm supposed to do to answer the required young ish. Example. That's what you were supposed to do. So, but before I go to the, let's open your illustrative example. I want to show you something. Team, understand these things. They are so easy. So I just want you to be ready in the exam, isn't it? I want you to be ready so that you won't be naive in the exam. So another critical thing, Tim, you're true to pick up, which is important. So you're saying if I go to illustrative example, this illustrative example, I can get context, I can get an example of how that thing is supposed to be done. So without open, I have a soft copy of this IFRS, I know. So I wanted to open my illustrative, but as I'm doing so, Tim, so that illustrative example, in other words, it's an answer to something. All right, let me open it so that I display it again. Just be patient a bit, team. I want to show you something so that we all illustrative. I know ndinacho. So chandoda kuedza kuvhura so that ndoda kukuratidza how do you use your standard muexam handini. Remember, yours it's an open book. Saka ndoda kukuratidza how to defend yourself. Musazongonorohwa kuexam uku handiti. Alright, ndaiona ngainova nangu ikopa ndoda kuisa desktop. So this is the illustrative example. So if I go to the illustrative example, team, ndukuda IFRS 3, don't forget that. We need IFRS 3. So in IFRS 3, what I'm looking for, that illustrative example, was it a disclosure note? Remember, I'm dealing with a disclosure note. So I'm going to go to IFRS 3, and there is a clear example, which is our illustrative example. What? It's illustrative example 72. Mat 72 and so if you go to illustrative example 72 here, we only illustrative example 72. All right, ish. So it's like a question and answer here. And so the following example illustrates some of the disclosure requirements of IFRS 3. It is not based on actual transaction. The example assumes that AC is a listed entity and that TC is an unlisted. So the illustration presents the disclosure in a tabular format that refers to the specific disclosure requirement. So, all right, for me, practically, this was my IAC paper. This IAC paper. This roga. And so in that that paper, team, what's important, what's critical? Ndakatosangana ne 33 marks idzo. That was the first time yandakaona disclosure note. That's why even my teaching philosophy, teaching approach, no doubt more understand how to use the standard on your own. And it was that was another AC ever need disaster. It did 35%. Though this one it was my extremes. So it was 35%. So I think one of the things which was a challenge to students was this disclosure note. It was the first time, and we've never been tested about a disclosure note. So we're seeing for the first time, but it's an open book. I have the standard with me. Happy days. So if I go back to B64, they are saying to meet the objective in para 59, the acquirer shall disclose the following information for each business combination that occurs during the reporting period. Number one, take this: the name and description of the acquiree, B, the acquisition date, C, the percentage of voting equity interest, then D, the primary reasons for the business combination. So if I close A to D here, team, then in the illustrative, they are clearly stating. So if you see here, team, Varkuti B64, I've applied para A to D. Let's prove that they've applied para A to D. Can we prove that? That's what you want to prove. So according to para 50, they are saying the name and description of the acquiree. Let's see. On 3rd June, AC acquired 15% of the outstanding ordinary shares of TC. On 30 June, AC acquired 60 of the outstanding ordinary shares and obtained control of TC. TC is a provider of data networking products, ETC. All right, so if you see here, is the name and description of the acquiree confirmed those really up. Combine A to D. Then, do you agree with me? The acquisition date is also given. When? On 30 June 2010. What else is included? The percentage of voting equity interest acquired, confirm is given here. We acquired 60% of the outstanding ordinary shares of TC. Okay? What else again? I just want to prove to you, Tim. I need you to have an understanding. Understand this. Let's make it easier. The primary reasons for the business combination. So again, here they clearly stated, TC is a provider of data networking. As a result, AC is expected to be the leading provider of data networking products and services in those markets. It also expects to reduce costs through economies of scale. So if I go to my question now, let's go to our question. So if I go to the question here, this is investment in Send. So they are clearly stating, Imfundo has done some research and found companies that supply do-it-yourself. This was attributed to the increase, which took place as part Sends and Koke, a manufacturer, to diversify its revenue streams. So why are we doing it? We want to diversify our revenue stream. On 3rd September, Imfundo obtained over control of Sensor by acquiring 80% issued ordinary share capital. The purchase price for 80% consisted of the following. All right. So do you agree with me, team? Mun exam, mun ayuya papara B64. Ndaitotanga kupindura even ndisina kumboita question yakadaro previously. Hello? Is it making sense? Is it making sense, Tim? Wow. I can see reactions. So you need to understand. That's why I say you should be able to use your standard. Be ready. That's why we call it an open book exam. That's where it's coming from. It's open book exam. So am I able to use my standards in the shortest possible time? Am I able to interpret it? Let's proceed. Okay. So then the next thing, I go to E, a qualitative description of the factors that make up the goodwill recognized, such as expected synergies from combining operations of the acquiree and the acquirer intangible assets that do not qualify for. So you see your E there. A quality of factors that make up the goodwill recognized. So if you go to the illustrative, how did they apply? So you see they are starting by saying the goodwill of 2.5 arising consisted largely of. You see, how did you get the goodwill? So which means I need to perform a working to determine the goodwill. So I first do the calculation. So if I go here, how do you calculate goodwill? Don't forget the basic principle. What's goodwill? Goodwill is the excess of fair value of what? Consideration plus NCI. I didn't say fair value of NCI. It's just NCI. Minus net assets taken over. But at which value? At fair value. Do you understand this? So it's goodwill is the excess of. So I'm going to do the same here. So they've given me the consideration. The purchase price consisted of. So there is cash payment. There is the issue of ordinary shares. There is an additional contingent payment. And don't forget, as I determine this is the fair value of consideration, these items, this one, it's making the consideration. So there is a cash payment, but it's paid in 2 equal installments. The first paid immediately, this one you don't have a problem. But the second one, which is payable on 3rd September, which is 1 year after, this becomes a deferred consideration. So I have to determine its present value. Why? I want to apply the fair value of consideration. Then the issue of ordinary shares with a fair value of 500. So this is already at fair value. So my consideration, it's your cash payment plus the deferred. Then plus this issue of ordinary shares. Then an additional contingent payment of 550 if sales are profit are 5% higher than the forecast. The fair value of the contingent was estimated to be, please, I need the fair value to be 495. So I'm going to take the 495 instead of 550. Why? I'm just applying the definition of goodwill. Goodwill is the excess of fair value of consideration. It's fair value. So please, everything which makes up, isn't it? Then, these were the assets and liabilities of Senza. So there's land, there's factory building, there's plant, etc. But the question is, were they at fair value? So remember, I did a session with you on if the assets are not at fair value, goodwill is excess. So I now need to determine the net assets. So for the net assets, we have got this one, it's 900. Yes, but they are saying amounts except land, it's 1.25 million. They are saying this is the corrective value. So it's understated here. So I would just have to change. I replace this 900,000 with 1.25 million. Is it making sense? Then I have factory is 4.6. I have to change this amount. It's 4.6 million. Then inventory 760, which means instead of 750. So I put 7.6 here. It's 0.76. For me to calculate goodwill. Then remember, I need the net assets. So for me to get the net assets, it's this 1.25 million plus 4.6 million plus 300 plus inventory of 760 plus cash of 300 plus trade and other receivable of 350 minus the liabilities. So I deducted the liabilities here. If I deduct the liabilities, that's how I get the net asset. But confirm we have observed, I've applied the principle. Mabate team, my principle and I apply. Hello. Questions before we proceed? So it's about the principle. How do you use your standard? So I want you to be flexible. My exam team, not I'm flexible. I don't understand that the principle. So what the examiner always tests is the principle. It's not about how smart you are. Do you understand the basic principles? So everyone will be having their standards in that particular exam. So am I able to use the standard? So this principle, which means team, Mamax SI, Pandicha determine a goodwill. Once I determine goodwill, the kudzoka ndo apply a parachi 64E. Like how? The goodwill of arising from the acquisition consists largely. So what constitutes that goodwill? Happy days. This one that per question up. Sensor continually looks for ways to improve its business and therefore the objective is to publish ideas. So they've stated things here which I should take into consideration. Guide one illustrative. After E, is it making sense? We go to what? After E, we go to our F. What's on F? What's on F? So the acquisition date fair value of the total consideration transferred and acquisition date fair value of each major class of consideration such as cash, other intangible assets including a business subsidiary, liabilities incurred, for example, contingent, equity interest of the acquirer including what. So you see here, I just go back here, F, alright, so mguti pane cash, pane equity instrument, pane contingent. Hello team. Mukuzone ere finish. Fane zvire zviri apa izvi. As I always say, team, an exam, since we in a syllabus, I reset out of the blue. Examiner no setter using the principles in the standard. Are we following, team? Questions? We are just using and applying principles in the same standard. Questions? So, did it make sense now? Did it make sense? So, hakuna chinhu chinosetwa chisingabve standard. Everything is coming directly from the standard. So the way you answer, how you apply it, just be able. So illustrative-ish. Yangaitwa ngori solution yako yese. Ndatopedza kapa team. Ndichine need yekupfuurira here. Ndimuchanyasondianzira that question issue. And so I'm just here. The most important thing tonight out about you are supposed to be able to use your standard at the shortest possible time. Be able to interpret your standard. So your solution is already here. So there was no need for me. I was just going to apply what is here to my required. But remember, it should be directly related to Senza. Kwete kuti wakunyora illustrative. Senza, but articles are more or less similar to what is in the illustrative example. So I can use the illustrative example. All right, let's go to another required. Prepare journal entries to account for the lecture venue building in the financial statements of Imfundo for 2021. Okay, let's go to the paragraph which deals with the lecture building. All right. All right, yeah. So the question is, sale of a lecture venue building. Sale of. Given the impact of COVID-19 and the need for the company to redefine its business model and strategy, and based on low level of utilization of the building during 2020, Lily proposed that the lecture venue building proposed. So the moment we are still proposing, it is not yet a disposal. As soon as possible, part of the head office building could be converted to lecture venue if Imfundo decides not to offer the online courses. On 3rd November 2021, the board of directors approved the proposal. So team, as long it's still a proposal, it's no longer an IAA 16. It becomes an IFRS 5. And started the advertising process immediately. All criteria for classification as held for sale and were met on 30 November 2021. So if we have met the criteria for IAS 5, the building was acquired on 30 November at a cost of. So team, remember, I said each standard usually, we start from classification. So the classification here, there is no need because it's already stated by the examiner. Then we go to our recognition, but this one doesn't deal with recognition. We go to our initial measurement. So mostly on your initial measurement, then you go to your subsequent measurement. Then we go to our presentation and disclosure. Presentation and the disclosure. So please, according to the examiner, they need you to do what? What's the expectation of the examiner? So examiner arikuti arikuti tikuda my journals for this. Let's proceed. So on 30 November 2021, that's when the board approved the proposal and started the advertising process immediately. All criteria for IFRS 5 has been met. So if I quickly open my standard, if I'm not sure in the exam, if I open my IFRS 5, so you start from your para 6, let me quickly open. So the classification for something is held for sale. So if I go to my para, I start with my para, not the disclosures. I need para 6. So the classification starts from para 6 here. You see, an entity shall classify when, if it will be recovered presently through a sale rather than through continuing use. Then 7, for this to be the case, that's when they talk about the sale must be highly probable. Then para 8 clearly states when can we say the sale is highly probable, of which all those things we are being told they were met. So if all these things have been met, which means I have to go to my initial measurement, which is my para 15. Hello? So if I go to my para 15 here, it's clear. An entity shall measure a non-current asset or disposal group classified as held for sale at the lower of its carrying amount and the fair value less cost to sell. So we are going to classify it at the lower of its carrying amount and fair value less cost to sell. That's what the standard say. But I need you to understand something. If you go to your para 18, it clearly states something. Immediately before the initial classification of the asset or disposal as held for sale, the carrying amounts of the assets, all the assets and liabilities, shall be measured in accordance with the applicable IFRS. It should be measured in accordance with the applicable IFRS. So if they are saying it should be measured in accordance with the applicable IFRS, they are simply saying, for example, this was a building and it was being used. So the question is this building an IAS 40 or an IAS 16? What's the difference between an IAS 16 and an IAS 40 building? Hello, team. You know the distinction? The simple distinction, if you go to the classification here, to the definitions, if it's property plant, it's held for use or in the production or supply of goods, for rental to others or for administrative. So it's for use in the production. But how does it differ from an IAS 40 building? I just want to do a quick, how does it differ? So if you go to para 5 again, they define an investment property is land or building held to any rentals or for capital appreciation. So in our circumstance, team, this building was used as a lecture venue. So it's not for rental or for capital appreciation, which means it's still in IAS 16. So if it's an IAS 16 thing, so according to our principles of IFRS 5, they are saying immediately before the initial classification is held for sale, the amount, which is your net book value, isn't it, shall be measured in accordance with the applicable IFRS. So they are saying before to this part ish, to this paragraph, para 15 ish, we have told us what shall be at the lower of. First, determine the carrying amount. But how do you determine your carrying amount? They are saying in accordance with its current standard. Happy days. Steam, feel free. Questions? So, happy days. So let's proceed. So, questions before I proceed. Questions before I proceed.
I say.
Yeah.
I think I'm going to question, but it's not going to issue. My questions zvakadai zvinenge zvinoda kunzwa ndei because ainda sticker patanga ndichinyora rights issue game rabva rapera ipapo manje.
Masipota bapera.
Vapera because ndasangana nechinhu chandisinombobvira ndakasangana nacho career yabva yapera manje saka thank you so much ete zvatombotivhura.
So you see kuti sometimes hatidi questions anopedza career and life threatening. So that's the importance of understanding the standard, team. So you see kuti the principle now, the greatest challenge why IAC seems very difficult, it's issue kuti vantu kuenda with a lot of knowledge gap. So number one, I might have knowledge gap, but am I able to utilize the standard? Kungono understand how I flag also matter. Tanak. Saka, those are some of the things which might come with exam. So how do we deal with those circumstances, those situations? Okay, so let's check it further. Again, then they are saying here, if we can see, observe, let me proceed. Let me take it this way. So immediately before, before I classify it's lower off. How do you determine the carrying amount? So para 18 is saying use the standard, the relevant standard. So I want now to use the relevant standard. Every day, I want to go to the relevant standard. So for me to go to the relevant standard, all right. So which means I have to go back to IAA 16. That's what they are simply referring me to here. They are saying first understand it in terms of IAS what? 16. So on the board of directors, when they approved, that's when they approved the proposal. The building was acquired on 30 November 2018 at a cost of 7.5 million. Please, my dates akakosha kuna accountant. So chekutanga ndakutoya ndosikuti this is November 2018, which is the end of the year. That's when we acquired it for 7.5 what? Million. Confirm. So what it means, since we are now on 3rd November 2021, all these years, it was an IAA 16 issue. So it was supposed to depreciate. So it's 2019, because if our year end is what? What's our year end date, please? That's another key factor. What's our year end date?
31 December. 31 December.
It was 31 December.
Yes.
Are you sure?
Background. Background.
Yeah?
Background.
Oh, it's stated. It's fine. So if our year end is 31 December, meaning to say if this was bought on 30 November 2018, it depreciated for 1 month, which is 1 December to 31 December 2018. Happy? Then the whole of 2019, it depreciated. The whole of 2020, it was depreciated. Then in 11 months from January to 30 November 2021. Hello? Kana tinashe zvaandudza zviri correct kuti yeend yedu tizoka team ndiri kubatika here. All right. So I need you to understand and appreciate that. So mukatarisa this one ndangoitanga from Norway because ndangoda kungovhura question so that we appreciate these things. And so it's not about just understanding my paragraphs, but it's about interpreting. Iri kumboti chii paragraph. So what's important is the interpretation, team. Are you able to interpret those paragraphs? So I'm applying. So they are saying immediately before. So we now need to count, team. Let's determine our depreciation. So to now calculate a depreciation here, but before I go there, tukubatan disus. Muswam tapiwa my dates. 30 November 2021, which is the date it was classified as the old for sale. Move about the team. Pani impairment tapiwa fair value. Nearly cost to sell. But on 31 December 2020 again, part time as the team up. Pani impairment loss of 1.5 million. Yo, up. That's the most important thing. So let's not forget. Tangata acquire asset yedu debt team. Let's start from the debt that acquire asset yedu. 30 November 2021. Do you agree with me? So I need to count the years to depreciate up to the date by a test for impairment. So from the date redu, let's take 1 month, December 2018. So that is the whole of months, please. The January 1 January 2019 to 31 December 2019. So that again 12 months. The Kuba Muswa 1 January 2020 to 31 December 2020 because to Kunzpaitika impairment loss on 31 December 2020. Confirm team. So which means I need to determine the accumulated depreciation for how many months? For 25 months. Happy days. What's the accumulated depreciation here? Hello team. So it's 25 months. Let's depreciate. So it's 20 years. So mostly since vandipa ari months team, ndo pamunozombosangane ma questions ekuti vanotanga vaiti let me put it this way. 20 times 12 ichi 20 times 12 ichi team. What do you get? It's 20 years times 12. It's what?
240.
240 ndikaisa kuma months. So far it is depreciated for 25 months. Confirm. Which is your 25 over 240 times 2.5 million. So 7.5 million. What do we get? That's my accumulated depreciation here. What do you get?
781,250.
781
250.
781 250 like this. Then 781 250. So which means our carrying amount, team, our CA, is what? Deducted from 5 million, deducted from 7.5.
It's 6,718,750.
All right, so it's
6718.
6718.
750.
750 like this. Then team, listen. Don't worry, this is at 31 December. Please, ndichengetero number yako 100. Ndichengetero. So it means they are saying in this asset, year 68 as it's 681750. Confirm. But it could paitika impairment loss. I know short. All right, it's 67. All right. It's what? 66718 All right. Then this is the carrying amount. As it please, Paita 31 December 2020. Then minus the impairment loss, because they are saying there is an impairment loss of 1.5. So that I determine what was my recoverable amount. What do you get? So it means because an impairment loss arises whenever carrying amount in terms of our IAS 36 is greater than the recoverable amount. So I can determine the recoverable amount up. Ichi? Chi? Hello?
It's 5,5218,750.
750 like this. Pabatikere team. Please, about tisati impairment. It's not yet classified as held for sale. Then, which means Takufano could depreciate the same asset from which date? Takui depreciate from 1 January 2021 to 30 November 2021, pan 11 months. 11 months is depreciate. It's now 11 over 240. What do we get as our depreciation? This is our depreciation.
It's 239.
It's 239.
192.71.
2319.
It's 239,192.
192 like this. Confirm.
Just remove one. You put
Alright.
1. Yeah.
So it's 239.
Yes. 192.71. Now it's okay. It's okay now.
Upper it's no longer 240. Sorry, please. Let's remove the first 25 cards here. Sorry. And it's in 25 Zangazato Shando. So it's now 215 up. Confirm. Yes. Useful life. After impairment. Pass out at 25. 215 years. Because I removed the first 25. What do you get? Sorry, the correct zero up.
267,006.
267,006 like this. So in your depreciation, so I need to reduce this depreciation. This deduct because the carrying amount young yapa is 52180 267,006. So team, what we are simply doing here, I'm applying para 18. Yeah, immediately before the asset is recognized at the lower of carrying amount and recovery and the fair value cost to sell. Tanga wa dealer now in terms of the standard. So as of 30 November 2021, what will be my carrying amount here? This is the carrying amount. What do you get? If we deduct
4951,744.
4951
744.
744 like this. Please, carrying amount. But on the same date, musi wa30 November 2021 mubabate here team ndopatiri kunzi the fair value iyi cost to sell. So ndakuchiti kuti ive fair value inozonzi fair value less cost to sell. Let's put it to fair value less cost to sell. So if go to fair, what do you get? 4750 minus 500?
4250.
Don't forget, I'm still in IAS. It's what? 4250. I'm still in IAS 16, please. All right. So if I get this 4250, but now this is the carrying amount, 4951744. This is the fair value less cost to sell as at that date. So the question is, remember they want you to do journal entries. And it turns into journal entry. So journal entry redu ndakutanga the first journal entry rangu team ndiri muna 2021 ku recognize the depreciation issue take place from 1 January 2021 up to 30 November 2021. So the first journal entry, I'm going to debit my depreciation. Debit DPN, which is 267,006. What do I credit? Accumulated depreciation and impairment. Happy days, which is 267,006. Then another principle in one that was mistake nema students team. Takufana could recognize this asset from IAA 16. I'm still on para 18. Immediately, let me take you back to para 18. Team, get this right. They are simply saying in terms of para 18, immediately before the initial classification, as held for sale, the carrying amount of the asset shall be measured in accordance with the applicable IFRS. So it's still in IFRS. Since we now want to classify it as held for sale, as on 30 November 2021, please, I'm not yet applying para 15, which says lower off. I'm just de-recognizing it. So I'm de-recognizing it. Which amount should be de-recognized? I want to de-recognize so that it's classified as held for sale. So the first journal still I debit. Listen, this 4951, that's the one it's going to be transferred to non-current asset held for what? For sale. Happy days. 4951744 like this. Then I debit accumulated depreciation and impairment. Please, how much is my accumulated depreciation and impairment? So my accumulated depreciation and impairment team, I'm calculating from the original. So subtract that from this the 7.5, or I usually want to leave this as a balancing figure. Then I credit the building here. I've de-recognized it in terms of my IAA 16 de-recognition, because it has been now reclassified as now a non-current asset held for sale. So 7.5 minus the current net book value, what do we get here? 7.5 minus 4951744. That's why. Because the moment it's now classified as held for sale, we no longer recognize depreciation. Happy days. We no longer recognize what?
Sorry, sir.
Mm-hmm. Yes.
Hello. I wanted to ask on the non-current asset held for sale, that figure. Isn't that supposed to be 4250?
No, not yet. Ndichiri kupara 18 Olam. I'm not yet para 15. Please. Para 18. Yeah, no, that's the greatest mistake in network math students. Immediately before the initial classification, as held for sale, the carrying amount of the asset shall be measured in accordance with the applicable IFRS. So Trikuti, I'm still in IFRS, IA 16. So Ndakudi recognizer in terms of IAA 16. You get it?
Okay. Yeah, I get it.
I'm still derecognizing this building is no longer an IA 16. It's now being classified as held for what? For sale. All right. Let's proceed. So, what's the difference here? Let's make it faster, team.
2548 256.
2548
256.
256 like this. Then let's proceed. Then Olam, I now go back to para 15. It's now in IFRS 5. So in IFRS 5, they are now saying an entity shall measure a non-current asset classified as held for sale at the lower of its carrying amount and fair value less cost to sell. You happy? So I now compare this 495 and now 4250. So this asset is supposed to be recorded as 4250. But Isusi Yanga Yaunzwa Patai derecognizer from IAS 16, it was 4951. So the difference is an impairment loss. Hola. So let's subtract the difference. 4951744 minus the 4250 because it's supposed to be recorded at the lower, which is 4250. So it's impairment loss of how much?
701,744.
Just a moment. Impairment loss of how much?
701,744.
Like this. Then we credit what? Non-current asset held for sale. Olam yadzoka pa 4250.
Yeah. That's what Jika.
So para 18. So if you miss the para 18, everything then this was on 30 November 2021. Then it's now at 4250. But on 31 December, you see here, Tim, we are being told that the fair value is now 5,000 minus 525. What is my fair value less cost to sell here? 5,000 minus 525 becomes 475, if not mistaken. Confirm. Hello? Takambo ita mental week. Confirm. Just confirm. If you say 5,000 minus 525. Thank you. All right. Then, Tim, so can you see that there is an increase in the value, fair value here? So if there is an increase in the fair value, what should we do? It increased. We can do what we call reversal of an impairment loss. But remember, it should always be limited to the previous impairment loss, isn't it? So we now compare 4250 minus the 4250 minus what do you call it? The amount minus 4475. What's the difference here? So how much? 4475 minus 4250. We are reversing the impairment. 225. So if impairment is being reversed, we debit non-current asset held for sale. with 225,000, then we credit impairment loss. Happy days. It's a reversal. To be specific here, you have to clearly state that's a reversal, isn't it, of an impairment loss. Question. That's reversal of an impairment loss. Happy days. So you see how you can use your standard to answer any exam. In other words, Tim, I always encourage you first deal with the principles. When you understand the principles, it's not about you understanding the paragraphs of head. No. Just understand the principles. So whenever I'm in an exam, I should be able to utilize the understanding of the principles to answer any question. Any questions before I proceed? So that's the most important thing. Let me give you another question here. So for this one, any questions before I proceed? Any questions before I proceed? I want to take you to another question. So let me share with you again another question. I'm just giving you hints, Tim, so that you know how to practice. All right? You should be ready and prepared. I'm giving you another IFRS question, but I'm on the required here. So the first one, confirm you can see my FINAC required. Provide journal entries, which is your cash transactions included, to account for organogas in the financial statement of bioenergy. Then B, disclose for only Femendo the following with respect to the financial statements of the intangible asset note. The intangible asset note. So it's your first time again in the exam. This is an intangible asset. I open my IAS what? 38. Is it making sense? I have to go to my IAS 38. So I don't want to go much into detail. Not much important apply our team. Can we try apply? I know Mukita's machine. Can we go apply that for me? And so tomorrow we should have a session, team. Please, I want you to us to discuss. I need time which is flexible. My timetables, but I think we are going to start at 6 a.m. tomorrow. We are going to start at 6 a.m. Let's have a 6 a.m. session. But that 6 a.m. session, team, I'll be dealing with biocore and akupayosh. Dilana biocore. Please, ignore a fresh cut into Kumuda. Let's just deal with biocore. Happy days. So we are ending this session a bit early.
MC.
Yeah. So please, 6 a.m. tomorrow, or 6:15. Let's say 6:15. We are dealing with that biocore. So before you sleep, team, try to use your standard. Pindura biocore. All right. Good night.